Have you guys noticed the stock market has been a little uneasy lately, kind of volatile? Well, it's kind of the news due to this guy right here. Jerome Powell is his name, and he is the Federal Reserve Chairman. Now, he was elected by Trump in 2018, and now he just got another 4 years thanks to President Biden. But basically, he really helps steer the economy and direct it in the direction it needs to go to stay healthy. And so what is the Fed and the Federal Reserve? What do they basically do? Well, they definitely deal with managing inflation, which we will talk about in a little bit because we hear that word so much lately. Also, it supervises the banking system, it maintains the stability of the financial system, and it provides banking services. So all in all, the Fed is very powerful. And the proof of that is that due to that 100-year, rare event, the pandemic, it caused the stock market and the economy to go into a free fall. Well, when the Fed stepped in, that's when the economy turned around and has gone up ever since. And why did it do that? Well, it's because there's a lot of stimulus involved, right? So they stepped in and they lowered short-term interest rates near zero, and they also started buying a ton of assets in the form of bonds, or aka treasury and mortgage-backed securities. Now, if we look at this picture here, this is the Federal Reserve balance sheet, and it's showing their assets over the last, couple decades. Well, look what happened during the start of the pandemic in 2020. Look how their assets shot up massively. Now, why did this happen? That is because they started buying 120 billion worth of monthly bonds, and that's their way of trying to put money back into the economy by buying all these bonds. Now, a term for that, the other term for the Fed doing this, is called quantitative easing. And yes, that sounds a little complex and might make you do what Ed is doing here in this picture from The Lion King. But basically, after the Fed lowered the short-term interest rates, that didn't seem to help. So they had to step in and buy all these bonds and also reduce the long-term interest rates. And what that does is it makes borrowing cheaper, all right? So taking out a mortgage or a car loan is now more likely by a consumer because it has a low interest rate. You're able to borrow more of your money and more money in general. And I think we saw the outcome of that, right? Look at the house prices and the car prices now. They're ridiculous. But it allowed people at the time that they needed it the most to borrow money at a very low cost or low interest rate. It also allowed businesses to borrow money and reinvest in themselves at a low interest rate, right? So buy more equipment for their business, hire more people. And so it really did do a good job at boosting the economy. But because all this money flooded in, what happened was something called inflation. Now, inflation decreases our purchasing power, and that's because the cost of goods and services goes up. So, in other words, what we used to buy, for gas for a car has gone up substantially, which means we're paying more, which means we have less money. We have less purchasing power. And so, inflation is now at a 31-year high. There's my baby picture from about 31 years ago when I was a baby cowboy having to make money for my family because of high inflation. Just joking, that was my grandma taking a cute picture of me. But seriously, this is causing prices to go up everywhere because when you have, oil prices rising and real estate rising and all these costs rising, it's also rising for businesses as well, right? So that forces them to raise the price of their costs of their goods and services. And so it just creates this effect where everything gets more expensive and the money that we have buys us less now, a lot less. And so with Jerome Powell, we're going to call him JP because that sounds cooler. What is he going to do about this? What's his job in all this? Well, we have a few things. They recently just approved that they're going to be buying $15 billion less in those bonds or those assets each month. So instead of 120 billion, it'll be 105. So they're kind of tapering that down, flooding less money into the market. And by June of 2022, they're going to stop all buying altogether. And the hopes is that this will help reduce inflation and kind of, stabilize those prices of costs of goods and services or bringing them down. But If that doesn't work, they have a few more options. They can start selling bonds instead of buying them. Or what's most likely going to happen is they're going to have to raise those interest rates. And so you can think mortgages will get more expensive, and credit cards and all those things. So instead of a 2.75% interest on your mortgage, it'll probably go back into the threes. And so you're going to just be paying more for your borrowed money. And what they're hoping to do with that is slow spending down, right? Too much money flooded the market, spending was going crazy. Now they want to slow that down. And by doing that, though, hopefully that'll reduce inflation, but they also got to be careful not to slow the growth of the economy. So it's a very tricky balance. And I am glad I'm not in JP's shoes, but I wish him the best because we all depend on it. Our economy depends on it, and so it's going to be very interesting to see how he deals with it over the next year. Now, like I said, this is causing the market to react, probably overreact, just like the market overreacts with everything. But now interest rates are expected to go up because Jerome Powell got elected. The other nominee was more on the side of not wanting to raise interest rates, where Jerome Powell is more likely to. So the economy is reacting because they see interest rates being, going to probably rise next year, and that's going to mean less borrowing power, right? It's going to cost more to borrow money, and that would affect all those companies out there that don't have a lot of cash and rely on kind of that debt to keep them going. And so you'll see companies like Apple are doing just fine these last 5 days with the news going out. And why? Because they have a lot of capital. They have a ton of cash sitting on their balance sheet, and they're not going to be very affected by this at all. But you have smaller companies like AMC in the last 5 days reacting negatively, along with a lot of other smaller companies or companies with not a lot of cash. People are a little bit worried. And, there are some other things in the market right now to keep in mind, I think, that are affecting and causing the volatility in the stock market, and that's infection rates are rising. So that's bringing some worry, as well as something called tax loss harvesting. So tax loss harvesting is basically when you have an asset in your portfolio that has done not very well, it's gone down, you're at a loss, and you decide to sell, and you take that loss, and that's going to help reduce your tax liability on any realized gains that you've made, right? So the stocks that have done good, if you've sold out of those and created a taxable event, you now can sell one of your duds and kind of offset those taxes, right? So research that. It's very interesting, but people are doing that now at the end of the year before the tax year ends. And so that's also creating some volatility and downtrend in a lot of stocks, especially the ones that haven't done well this year. So what am I going to do? What is my kind of recommendation? Well, it's the same as always. If you invest in good quality companies and diversify your portfolio, you're going to fare very well through volatility, right? So if you have, big, large cap stocks like Apple and Microsoft mixed in with small cap stocks through the different sectors of the economy, and you've done your research and you know that these companies have a very solid future and a good growth path, then all I say is if your stock goes down, just buy more. Bring your cost average down. And if you have some stocks that you got into that you're like, man, I got into this for the wrong reasons, maybe you should think of selling. But always buy quality companies, do your research, listen to others' opinions such as mine and anyone else you follow, but always look into it yourself, because sometimes you think of something that others aren't thinking of, and it might make you not buy into a stock, right? So with all that said, just stay sturdy in your investing. Don't let fear take over and you just start selling out of, companies. If you believe in a company, did the research, stick with it, keep buying, right? And long term, you should fare well. We're all going to have losers in our portfolio. It's just we can't pick 100% perfect stocks that are going to just grow. But if if you basically do the quality picking of stocks and all that stuff, you're going to fare very well and you're going to grow your money in a very big way, especially long term. So, with this whole Jerome Powell news and the other stuff that's happening, all I can say is just stick with it, keep your seatbelt on, and don't be fearful. Don't sell out, right? Because when others are fearful, that's they usually lose out. Just like when the pandemic hit and stocks started diving down, I had so many friends sell out and just lose a lot of money because then the stock market just went up, right? So just keep in mind that the Federal Reserve is always working hard to help the economy grow. Companies, especially good quality companies, are always working hard to grow their companies. So if you're investing in the stock market and in good quality companies, you're going to do well overall. All right. So with that said, guys, this is probably my last video for a week, but have a great holiday. Just try not to pay too much attention to, all that clickbait out there about the economy and fear, fear, fear. Just stay solid in your decisions, but always keep an open mind as well. Sometimes the fundamentals of a company's change and you need to, probably choose to sell out. But for the most part, if you did the research and stuff, your company should be good for the long term. But have a great holiday, and we'll see you soon on Mark's Finance and Fitness. Please subscribe to my channel. I appreciate your support and your viewership. It means a lot to me. I'm trying to grow this and help educate others and also myself along in the process. So have a great day, guys, and we'll see you next time on Mark's Finance and Fitness.